Hi everyone, my name is Vikas Amal and today I'm gonna talk about my presentation on the topic of tax determination in the Heartland Bank, which was the assignment that I did in this semester. So the topic of my assignment is tax determination in the Heartland Bank. Let's go through the introduction first. And in the introduction, I must tell you that this report is prepared on the basis of the financial report of Heartland Bank, and this report aimed to explain the tax related issues in the corporations like bank while determining the tax expenses. Alright, the body of this presentation consists of the definition of profits and types of accounting differences, permanent differences and temporary differences, and etc. And let's go through it. Difference between the total revenue and total expenses is the accounting profit. Profit that is subjected to tax determination is taxable profit. Differences occur due to the different rule of accounting to treat the same transaction are temporary difference and permanent difference. And there are two types of temporary difference, which are known as taxable and deductible. Deferred tax assets is caused by the taxable temporary difference, and deferred tax liabilities are caused by the deductible temporary difference. So let's talk about some criteria to recognize the deferred tax assets. Okay, when you are sure that there is appearance of deductible temporary difference in accounting, the difference amount is recognized as deferred tax assets. And when the tax expenses is already paid by the corporation, but due to the timing difference, income statement of the corporation did not show such tax payment, then deferred tax assets is created. When tax paid amount of the particular period is greater than the outstanding amount of tax expenses, in such condition, deferred tax assets is created. Let's talk about some criteria to recognize deferred tax liabilities now. When the amount of tax is paid less than the outstanding amount of the tax expenses, then the deferred tax liability is created. When you are sure that there is appearance of taxable temporary difference, in such condition, the difference amount is recognized as taxable temporary difference. And when you have already paid the tax amount on the basis of your own calculation, but later it is found that the amount of tax expenses is greater than that of the amount you paid, in such condition, deferred tax liability is generated due to the timing difference. And there are other issues in the taxations, which of them are the income tax expenses reported in the income statement is not always equal to the income tax expenses calculated by multiplying taxable income with that of the tax rate. Tax paid in the cash flow statement is not always equal to the tax expenses, and the determination of the tax expenses in the corporation has to adjust various transactions like deferred tax assets, deferred tax liabilities, current tax assets, current tax liabilities, and other concerned transactions. That concludes my presentation for this assignment. Thank you, everyone.